Ladies and gentlemen, good day and welcome to Namo eWaste Management Limited H2 FY25 Results Conference Call hosted by Ventura Securities Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference call may contain forward-looking statements about the company, which are based on the beliefs, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company, and it may involve risks and uncertainties that are difficult to predict. I would now like to hand over the floor to Mr. Rajneesh from Confideleap Partners. Thank you, and over to you, sir.
Thank you. Good day, ladies and gentlemen. Myself, Rajneesh Mishra from Confideleap Partners. We represent the investor relations for Namo eWaste Management Limited. On behalf of Ventura Securities and Confideleap Partners, I warmly welcome you all to Namo eWaste Management Limited H2 FY25 earnings conference call. The company is today represented by Mr. Akshay Jain, Promoter and Managing Director, and Mr. Sanjeev Kumar Srivastava, Chief Executive Officer. I would now like to hand over the call to Mr. Akshay Jain for his opening remarks. Thank you, and over to you, sir.
Thank you. Good evening, everyone. Myself, Akshay Jain, Promoter and Managing Director of Namo eWaste Management Limited. And joining me on this call is Mr. Sanjeev Srivastava, CEO of Namo eWaste. Firstly, on behalf of the entire Namo team, I extend a very warm welcome to all our investors, analysts, and stakeholders joining us today for our H2 FY25 earnings conference call. Before we begin, I would like to take a moment to express our gratitude for your continued support and belief in Namo's journey towards building a sustainable and circular economy for India. For those who are new to Namo, let me briefly introduce who we are. Namo eWaste Management Limited, established in 2014, is one of India's leading formal recyclers of electronic waste. We specialize in extracting value from end-of-life electronic products, offering solutions that span e-waste recycling, lithium-ion battery recovery, IT asset dispositioning, data destruction, and end-to-end EPR compliance services. With over 30,500 plus metric tons per annum recycling capacity, a pan-India network of 26 plus collection centers, and a strong focus on ESG compliance, Namo is a trusted partner for OEMs, manufacturers, and enterprises in need of secure, responsible recycling solutions. We are proud to announce that we have recycled over 70 million kilograms of e-waste as of FY25, making a meaningful impact on sustainability and resource recovery. Let me now move on to a brief overview of our H2 FY25 financial performance. For the year FY24-25, we delivered strong revenue growth of 50%, with EBITDA rising 29% and our PAT increasing by 25% on a year-on-year basis. This performance reflects our focus on client diversification, scaling benefits, operational efficiency, and the growing demand for ESG compliance solutions in India's e-waste sector. Our capacity utilization and profitability have continued to improve, supported by our multi-location ramp-up and integrated operations. Our current recycling capacity stands at over 30,500 plus metric tons per annum, and we remain on track to scale this to 68,000 metric tons per annum by the third quarter of FY26, which reinforces our position among India's largest formal recyclers. Now, let me take a moment to highlight a key regulatory development that is highly relevant for Namo and the broader industry. As per the revised waste management guidelines, all producers, manufacturers, and importers, essentially anyone who is placing a product into the market, are now mandated to ensure that after the defined life of the product, a minimum of 60% of the sales volume from the previous year must be recycled through a registered recycler. Importantly, starting from financial year 26, this recycling target will increase to 70%, making a significant shift in India's EPR framework. This is a structural tailwind for Namo, as it compels OEMs and brands to comply with these higher recycling mandates, opening up a massive centralized opportunity for formal recyclers like us. With India already being the third largest generator of e-waste globally, the potential for growth is immense, and Namo is well positioned to capture this demand. Our two upcoming plants are designed to fully capitalize on these regulatory shifts and market needs, with advanced capabilities for lithium-ion battery recovery and high volume of e-waste processing. I'm also pleased to share that since our listing on the 11th of September 2024, our stock price has consistently traded above the issue price of rupees 85, with an average of rupees 187 per share, reflecting the market's confidence in our business model, execution, and long-term growth prospects. This performance places us among the top 10% of premium companies post-listing, aligned with shareholder expectations for long-term sustainable value creation. In the closing, we remain focused on scaling our operations with ESG compliance at the core, expanding our services, offerings, and driving long-term value for our stakeholders. We are confident that the groundwork laid today will translate into sustainable growth and a greater value creation for the years to come. Thank you, and with this, I would now like to open the floor for questions and answers. Once again, thank you very much for joining this call.
Thank you, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have a question, please press star and 1 on your telephone keypad and wait for your name to be announced. If you would like to withdraw your request, you may do so by pressing star and 1 again. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad and wait for your name to be announced. The first question comes from Kaushal Sharma from Equinox Capital Ventures. Please go ahead.
Hi, sir. Am I audible?
Yes.
Hello.
Please go ahead.
Yeah. So very good evening, sir, and congratulations for a good set of numbers. So my question is on your margin side. Like I can observe that our gross margin has fallen due to rise in the cost of goods, so cost of material. So what was the reason of dropping the margin? Why is there a rise in the inventory impacting our CFO during the year?
So I will take your first question. The decline in EBITDA and PAT margins is primarily attributable to a rise in operational expenses. These include increased logistic costs, expansion-related hiring, as we are in the process of a robust expansion, investment in R&Ds, pre-construction expenses for our upcoming Hyderabad facility, and arranging material for the battery plant, which is supposed to be operational from next month, which is June 25 only. It is important to note that the expenses are commensurate with our significant increase in turnover and are strategic in nature to support long-term scalability and geographical expansions. So our freight costs have more than doubled, which is from 3.2 crore to 6.33 crore, mainly due to higher procurement from South India. So as we are expanding our footprints to greater geographies of India, the cost of reverse logistics, as in our business, reverse logistics plays a very important role in the cost factor. So because of that, that's the reason why now we are moving to the southern part of India. We are coming up with a facility in Hyderabad in order to mitigate this reverse logistic expenses.
Okay. And what about increase in the inventory levels, and what is the normalized inventory days in our industry, and how do we get the reduced level of inventory going forward?
Yeah. So, our inventory levels are higher. There are primary reasons for that. The first I would point out is pre-loading for battery plant operations. As I've just mentioned, the new plant, which is of a very huge capacity, is about to be operational, and we have started to buy raw material for that and also for the R&D purposes. And it is a huge project, so the numbers there are also slightly big. The second reason is bulk corporate discards received during the last quarter. This has been the case in our business, where most of the inventory comes during the last quarter. As we are in the waste management industry and also which is guided by regulations, so the last quarter becomes important for the compliance point of view of producers and manufacturers. The third main reason for the inventory levels would be that there is an explanation actually that inventory levels had actually dropped in October, November post realization of sales. But as I mentioned, the quarter four is again very busy for us, and we get a lot of raw material coming in. So during the year, there have been phases where our inventories have been down by almost 20-25% also.
So going forward, we are looking at reduced level of inventory this side?
Definitely. We are looking at reduced level of inventories and a better cash flow.
And sir, my last question is on our industry side. That in the month of May, I have heard that most of the producers have filed a writ petition on the High Court regarding our EPR prices because it is 2 or 3x higher than the unorganized sector, those who are charging. So what kind of your view on this, and how are we seeing this and impacting our business?
So our industry has been in a transition period from 2022 when the new set of eWaste management rules came out in 2022. And in that, the EPR is now applicable to over 130 items, which was just 21 items before the 22 rules. So there is a significant increase in the number of items, and hence the number of producers have also increased who are under the purview of EPR. So this has been an opportunity for us that we are trying to capture. But right now, as it is a transition period, so there is a resistance that is coming from the end of producers because for them it is an added cost, and somehow the producers, they don't want to commit that kind of cost for Indian recycling. They are spending 6-7 times of the average to what they are spending in India in developed countries. So this is just I think that initial phase where there is resistance, but as you have mentioned, as it is written in the rules clearly, now the government has come out with a minimum pricing formula which has been challenged by the producers in the court. But since the government has done all the calculations and they have a reasoning to why they have come out with these minimum prices. So there is a rationale behind it, and the matter in the court will not stay for much longer for the producers. I think the government is going to come out as a winner in this.
So could you please provide any update like in the last hearing that has been happened on 16th of May?
Yeah, so last hearing, nothing. Actually, the first case was filed by a couple of producers in which Havells was the industry leader. And then in last 2 hearings, more people have joined the same petition. So this is one of the ways by the producers. They are just prolonging the court procedure. And so last hearing update is that only a couple of more producers have been added to the same petition, and the recycler associations have also been a party to the case. This is the current status.
Hi, Sanjeev, just to add on to your question. In the last year, we also have a lot of producers who have already given us the minimum rate,
We are a company which believes in ethical recycling, and that's the reason we have always followed those things. We have let go of some of the business which were not coming at a minimum price rate, but at the same time, we are ensuring that all the rules and regulations laid by CPCB are honored and respected by us, so we are doing it.
Thanks for answering the question.
Thank you. The next question comes from Shaurya Punyani from Arjav Partners. Please go ahead.
Hi, I'm audible.
Yes, you are. Please go ahead.
Sir, what is the amount we have spent for CapEx in those 2 new facilities that are coming up?
For the new facilities?
Yeah, CapEx, how much amount have we spent?
So, we are spending, I mean, the IPO proceeds was about 11 crore 20 lakhs for the Nashik facility, for lithium-ion battery plant. And I think our expenditure is also increased because of the R&D costs, as we have mentioned, and also that, like, we have planned a further value addition to our process. So our the entire cost would be around 15 crores for this plant, out of which 11.2 crores are coming from the IPO proceeds.
And what about the Hyderabad?
For Hyderabad plant, we till now we have only done our expenditure on acquisition of land, which is about 6 odd crores, and some expenses which is pre-establishment, pre-construction expenses that we have already incurred. So Hyderabad plant, we have a projection of spending about 15 to 18 CR there also.
This will be done by Q3, right?
This will be finished by Q3, yes. The plant will be operational from Q3.
And sir, given the big CapEx that you are doing, so what kind of growth can we expect, like, in this year, next year?
See, can we do a forward-looking stuff? So, if you look at our past trend, we have been consistently growing by about 50%, 45 to 50% of CAGR. While we can't really make any forward-looking statement, but we expect this momentum to continue. Plus, of course, little bit delta can also come from the new facilities.
And what regarding the margin, do we see any improvement, or will they be under pressure because of the new facilities, the big expenses that we have incurred?
So as Akshay mentioned, that, for this year, major expenses have been towards the logistic cost, because we have started procuring a lot of material which is coming from south. So when we set up a plant in Hyderabad, there is no need for bringing all those assets to either Faridabad or to Nashik. So there would be improvement on that. Plus, last year we have got the funds only in the month of September. So as a result, our interest cost was there, for the first 7 months. Now we are using the IPO money for the working capital. So we expect that our operational efficiency will improve and the margins will improve from here.
Okay, so one final question. Can you provide the breakup of the revenue, with respect to eWaste, recycling, refurbishment, and the consulting, those 3 verticals?
Yeah, sure. So last year, 24-25, so we have done about 108 crores, through the recycling, which constitutes 72%. We have done EPR for close to 18.5 crore, that is about 12%. And for refurbishment, we have done 24 crores, which is 16%.
16. And is this sort of ratio expected, or it will change?
So this is, see, on refurbishment, we were expecting, last time we had done close to 12 to 13%. We were expecting it, to grow up. So this is in line with that. Recycling also, we were expecting, last year we were close to about 62%, which has improved to 72%. EPR, as I mentioned, that probably we were expecting little higher, but because of the minimum price coming and we not doing business anything less than minimum prices, so we have probably let go of some of the business. Otherwise, this kind of mix is pretty much what we were doing. Though we really want this year refurbishment to go up by another 2 or 3 basis point up on percentage terms.
Okay, sir. Thank you so much. Thank you.
You are welcome.
Thank you. The next question comes from Mohit Bharani from Vijit Global Securities Private Limited. Please go ahead.
Yeah, hi. Is my voice audible?
Yes, Mohit, you are. Please go ahead.
Yeah. Hi. Congratulations, Akshay and Namo team on good set of numbers. So
Thank you
my
so
first
much.
question is, first question is regard to previous one. Out of 150 CR top line, how much is electronic recycling? How much is service charges and refurbished electronics?
Yeah. Let me, actually, we have just mentioned it, but let me go through it again for you.
Okay.
So, out of our 150 crores top line, we have done 108 through recycling, which is through sale of metals, plastics, and the fractions of that are generated during recycling. Our EPR is at 18 crore 50 lakhs, which is about 12% of our revenue. So this is the service income that you are talking about in EPR. And our refurbishment revenue is 24 crores, which is a jump of 16% from the last year.
Okay. Got it. My second question is, what is the capacity utilization in FY25?
Yes. So, the overall plant capacity utilization has increased from 35% in H1 to 55% in H2. We are currently working with 3 plants, Faridabad, Palwal, and Nashik, out of which Faridabad is now running at 100% capacity. This has been our first year where we have utilized the entire capacity of our Faridabad plant. Other 2 plants are operating at 35% and 60% utilization respectively, in which Palwal is operating at 35% capacity. This plant, which is at 15,000 metric tons capacity, we started in 23 only. So this is only second year of operation for this plant, and we have utilized 35%. And the Nashik plant has utilized 60% of its capacity. We anticipate further ramp up in the coming quarters, especially with the operationalization of new units.
Okay, got it. So my next question is with regard to financials. We have not created tax provision in H1, and the full provision has been created in second H2.
Yeah.
So why is that so?
Yeah, I have Sanjeev here. So actually, in the first half year, if you look at it, our tax was, 5.34. So that time we had taken a view that as per the current guidelines, we are exempted. We are basically allowed to take the tax for the 5 years deferral mode and charge on a pro rata basis. So later on, we took a legal opinion, and in this year, while finalizing the tax, etc., then we were told that only 5% of the capital expenditure can be taken, and there are certain, areas which are basically permitted if we wanted to take the tax exemption. But that is only towards the marketing and advertising, which in any case was coming about only 50%. So we thought of not taking any kind of exemption. It is better to, be complied. So therefore, we provided full tax, in this H2. That's the reason. Otherwise, if you look at it, our PBT is higher in line with our business. Last first half year we had done 67 crore. This half year we have done 83 crore, and PBT is also higher, come from 5.34 to 6.34. But just because the tax is higher, therefore you are seeing it will be drop on the PAT side.
Right. Correct.
In H2.
So from now onwards, we will create provision on half yearly basis, right?
Yeah, now onwards, because there was some, that time we were very new, so we had taken, some of expert opinion from some of the, competent people, but they had said you can take. But then we actually, out of the 61 crores for which we raised an IPO, only 11.20 crore was towards the capital expenditure. 5% of, only could be allowed. So when we really studied all these things, we met our auditors and we took legal opinion from, other people, then we were told all these things. So we thought that we will not like to be, doing anything in contravention to the existing tax guidelines. So we provided full 3.3 crore for the full year, and that's the reason I already mentioned that our tax is looking little lower than what first half.
Got it. So my last 2 questions. One is with regard to borrowing. We have mentioned change in short-term borrowing in cash flow from operation. So actually this will lead to negative cash flow from operation. As I think so that it will be form part of cash flow from financing.
Can you please repeat your question? I didn't get it properly.
In our financials, we have mentioned change in short-term borrowing in cash flow from operations, which lead to negative cash flow from operations. So I think it need to be mentioned in cash flow from financing.
So let's allow me time. I will just get back to you because I'm seeing it here.
Okay. And last question, what is the percentage of allocation of revenue between H1 and H2 normally in this type of business?
So normally, H1 is about 40% and H2 becomes 60%. That's how it is.
Okay.
But so it was actually 25-75 for until last year. Here that gap has been narrowed down and we are now at 40 and 60.
Okay. In last year we have done 35-65 and this year 45-55.
Yeah.
So going forward, it will be maintained in this way or there will be change?
Well, looks like currently yes, it is going in this way only.
Okay, got it. Thank you.
Going on your previous question, so if you look at it, we had 8 crore of working capital in Namo from Canara Bank, and in Techico also we had taken facilities. When we got the working capital through the IPO route, so we have adjusted this Canara Bank outstanding, and also the Bank of Maharashtra outstanding, which is for Techico, is also reduced. Therefore, you are seeing a difference that 11 crore has moved to only 1 crore.
No. My question is actually short-term borrowing, change in short-term borrowing जो हुआ है वो आपने cash flow from operation में डाल रखा है, जो कि मुझे लगता है कि cash flow from financing में आना चाहिए, because this will lead to negative cash flow from operations. If you see cash flow from operation on page number 11 of your filing. Okay. Increase or decrease in short-term borrowing.
So I've noted it. I will discuss it and come back to you, Vijay.
Yeah.
Okay. Discuss with the auditor. Thanks for bringing it out. Yeah.
Okay.
Thank you. The next question comes from Kapil Ahuja from Equinox Capital Ventures. Please go ahead.
Yeah, hi, Mr. Akshay and Sanjeev ji. Congratulations on the good set of numbers, but I was really shocked seeing the margins, but you have explained me well regarding the pre-loading of lithium ion raw materials and most of the inventory that you take, the bulk corporate discards that you take in Q4. So I need to understand regarding this Hello? Yeah, I need to understand regarding this Nashik plant facility. So what are we exactly doing in this? We are recycling the batteries or we are doing the refurbishment of the batteries?
Hi sir, thank you for joining this call. So for Nashik, we have been running eWaste plant of around 10,000 metric tons capacity since 2019 there. So we have just acquired the adjoining land. I mean, not acquired; it's on lease, where we have established this lithium-ion recycling plant. Now, this the recycling of lithium-ion batteries, it has got two domains. One is refurbishment and restoration of battery cells, where the entire battery is not waste. There are some cells with some IR still left. The power left, and that can be restored through a whole refurbishment procedure. Now, what cannot be restored or refurbished, that is put through shredding operations for the creation of black mass, which leads to the extraction of lithium, cobalt, and other rare earth metals, as you might be aware of. So the entire operations for battery, I think what we are forecasting is about 20 to 30% refurbishment and 70% from the shredding and creation of black mass.
Okay, so we are just doing the black mass, not further going into mining of this cobalt from it.
Not right now, and also one of the key factors is that if we get into the refining of those rare earth metals, the capex, as per the global average, because globally there are only 10 or maybe 12 success stories around the world who have been leading companies in this field, and for them the capex has been in excess to $500 million. So definitely we are not prepared for that race. So what we are doing right now is to be able to supply to these refineries the raw material, and the black mass that we are going to produce is going to be of the highest quality standards.
So who will be the users of this black mass? Who are generally the users?
We have to export it. There are solutions in India, but those are not too efficient, and especially on a broader scale, because there is a laboratory scale where these things can be proven theoretically. But if you put it on an industrial scale, the highest efficiency is required, because we are dealing in ppms of these rare earth metals. So you lose 1% in your process efficiency, and the ultimate loss could be very big. So right now we are looking to export it to the top global players. That could be China or Taiwan, and they are among the top 3 in the world.
So our capacity of this black mass would be how much?
We have a 7,000 metric tons per annum capacity for black mass, just black mass, and further 5,000 for refurbishment.
7,000 plus 5,000. So
yes.
So out of in this size 7,000, we would be doing capacity utilization in first year. How much around?
We are looking at minimum 35%.
35%, and in this 35% revenue potential will be how much?
For
this 35% capacity utilization, the revenue potential and the margins would be how much?
The revenue potential, the margins are going to be somewhere around. The gross margins in this field is about 18 to 25%, and the around 3,000, 2,500 metric tons. This would result in a revenue of around 80 to 100 crores.
80 to 100 crores. Okay.
Yeah.
Okay, so there will be a big jump in revenue, we are hoping. And how will we are getting this old batteries? We have a direct tie-ups with the automakers, or from whom we are collecting these old batteries, lithium and cells and batteries?
We have tie-ups, and also we are creating more and more sources now. That's one of the primary reasons for setting up this unit in Maharashtra. 20% of the battery capacity of India is in Maharashtra state. So yes, we are looking at B2B tie-ups, and also we are procuring from the local market. This because we also have EPR applicable on this material also.
Okay, so we can have a direct tie-up with MG or the Tatas of the world for the
yes. Tata Motors, LG, Ola Electric, MG, and all the other major automobile players.
Who are the big companies in this field in India? Who are converting these old batteries into black mass?
See, to take a few names, it would be Atero, Loham, and Rubamin.
Okay. So there is not much competition. There is enough competition in this, or is it a saturated market? Can you give me a little insight?
I would say there is a lot of room yet, because generation is really high, and there are 14 formal players right now in the country.
Okay. So these Loham and Atero are doing refurbishment also?
Yes.
Similar business. Okay. And sir, also on the marketing side, because this battery business is going to be a complementary business for us. We already handle a lot of e-waste which comes with the batteries, right? So until now we had been depending upon our downstream vendors. So this is going to be a complementary business for us. That's when we are venturing into it.
Oh, great. That would be good. So each and every battery you would be able to do of electronics also, the small batteries that we get, those are attached to the mobile phone, so you will be able to refurbish or recycle into black mass.
Yeah. Anything which is lithium-ion battery have got different classifications, cobalt-based batteries, manganese-based, nickel-based. So that has further bifurcations, but we are equipped to do all of that.
Okay.
It is not like that different type of methods are used. It's just one method which is used for entire these batteries.
Okay. Thank you. That's all from my side. You have explained well, and best of luck.
Thank you so much. You are very welcome.
Thank you. The next question comes from Ashish Jain, an individual investor. Please go ahead.
Hi, team. Congratulations on the number. I have two questions basically. One is around, so when we supply these materials to these different companies, is there also a possibility of refining them, going forward in-house, not specifically black mass, but something else, which would give us improvement in margins? Any thoughts on that?
Yes, there could be value addition, but that value additions are feasible on the scale. So, because as we are dealing in metals, what we are extracting out of recycling is metals. So, the processing and reprocessing of metals is a different, altogether a different business model. But yes, firstly, in my experience, I have visited many recyclers outside India, and of course, I know what is happening in and around India. So, normally, eWaste recyclers don't get into, adding further values to the basic raw material. So, our job is to provide clean raw material for the foundries, and in which there is no real scope on a small scale for any further value addition. As the scale grows in future, yes, there could be a possibility, and especially with the producers and government's focus on reusing the recycling fractions for manufacturing. This is the whole circular economy model that is being pitched by the government. So I think, yes, in future, that could be one of the things we can look into.
Got it. Another question is in terms of there are different types of materials or rather, end-of-life products that can be recycled. So what is the maximum, what are the products that we recycle the most? Is it larger products, consumer electronics and stuff like that? So any sort of breakup on that?
We are mostly doing consumer electronics, which includes your small appliances, kitchen appliances, large appliances, which is air conditioner, refrigerator, washing machines, and then mobile phone and accessories. So mostly related to consumers, which is about 70-80% maybe, we are dealing in these products.
Okay. And a related question to this. So there would be a lot of plastics, and you mentioned that it's metals that are recycled the most. So what happens to those plastics? Do they have any value? Or what happens to those things?
Absolutely. There are so many different types of plastic, which are ranging from probably 10 rupees to over 100 rupees. So what we are doing currently is we extract plastic from different electronic devices, and then we categorically segregate it, shred it for the size reduction, and then sell it to a plastic recycler. This way, we are able to get maximum value out of the different plastics that we generate.
Okay. And I have just one more last question. So, because of this changes in the price of credits, I heard it from a lot of companies that there have been that they have been trying to create a backlog and not been trying to sell their credits, anticipating that there's going to be a price hike in future. Has our company done something of that type as well, or what's your point of view on this?
No. So, firstly, we are not a EPR dependent company as such. We have a very well diversified revenue, which is coming from 3 different revenue models. So, we have not created a situation for ourselves where we have done excessive recycling and then waiting for our credits to go into the market. We have, enough demand for the credits that we generate. But the only thing is that we only deal with over minimum prices. So we are not making any deals. We are not providing any credits for less than any minimum prices. So in our case, we as such don't have any kind of credit inventory. So
that means basically, so whatever the price has been decided by the government or CPCB for that matter, we are already above that price or at least in that range.
We are either above that price or minimum at that price.
Okay, got it. Thank you, and wish you luck for the next upcoming quarters and years. Thanks.
Thank you so much.
Thank you. Ladies and gentlemen, if you have any question, please press star and 1 on your telephone keypad and wait for your name to be announced. The next question comes from Jairaj Jain, an individual investor. Please go ahead.
Hello.
Please go ahead, sir.
Yes, hi.
Am I audible?
Yes, you are. Please go ahead.
Yeah, congratulations for a good set of numbers. So my first question is what will be your capacity utilization for FY25 at your 68,000 metric ton plant, and what will be expected utilization post Nashik ramp up?
So as I said that last year we have improved from 35% to 55% of capacity. And with the growing demand, we already covered this year 70% of the target should come from the producers. India is already third largest generator of e-waste. In a normal course, this industry is growing by 20-12% on CAGR terms. We expect that this year our utilization would further probably get scaled up from 55 to maybe 65-70%.
Okay.
Hello?
Thank you.
Yeah.
And once your operation will be started in Q1 FY26, so what can we expect your annual throughout to revenue contribution from this?
So this we have already answered. I think Akshay just now said that this plant is going to be commissioned next month, the lithium-ion plant, and I think we will get close to about 7 to 8 months of business in the next year. And we have, even if we conservatively take about 35% of utilization from this plant, we are looking at about 60-70 crore kind of addition in revenue through the battery waste management. Yeah.
Okay. Can you tell me what was the total e-waste collected in FY25 versus actual processing, and what percentage of collected material is used for reusable and refurbished purpose?
So we have said that we have given this data that the refurbishment what we did is 16%. Rest all we recycled. So out of this 149 crore of revenue, 34 crore is the refurbishment value. So which is we have refurbished. Rest all recycled. That also includes EPR income of 18.50. So recycling, if you look at it, it is 108, which is almost 70%.
Okay. My last question is with there are over 500 former recycle license in India. So what will be a barrier to entry in your this recycling segment as a new player? And any industry consolidation trend do you see?
See, the entry to barrier is probably raw material sourcing. That's the biggest challenge in the business. As you can see our strategy also that we are trying to reach out to maximum places. We have a facility in west of India. We are coming out with a facility in south of India. So the challenge is not really about the expansion of current capacities. It's also about it's always about the raw material sourcing that has to be done. This is something that is generated on the ground, and to bring it into the mainstream and to the factories is a serious job.
Okay. Thank you for answering my question. Thank you.
Thank you so much.
Thank you. The next question comes from Riddhi Agarwal, an individual investor. Please go ahead.
Hello. Am I audible?
Yeah. Hi, Riddhi. We can hear you. Please go ahead.
Yeah. Pardon me, I just lost you in between. So I have a couple of questions. My first question would be, sir, as I was comparing your margins quarterly, like every half yearly, so we achieved the 13% margins in FY23. Then we went down to 10%. And then this half yearly we achieved 8%. So my major concern is why this is dropping it, and can you just give me a sustainable range which can we expect in future and the reason for the drop?
Riddhi, I think, there's some, difference in the numbers. Our PAT margin for financial year 23 was 4.13%. And then
I'm sorry to interrupt. This is, I'm talking about EBITDA margin.
EBITDA margin, yeah. So you spoke PAT, that's when I got confused. So EBITDA margin 23, we were at 6.61, and then in financial year 24, our EBITDA margin went up to 11.07. Currently, we have EBITDA margin of 9.85, which is pretty much in line, right? If you look at it, we already explained that because of tax provisions and also because in the first half we did not provide it, and I already explained the reason why we did so. But later on, we got the advices and the legal opinions, and we had to provide for that reason in the second half. We provided for 3.22 crore of tax provision. So because of that, the PAT has slightly, come down. But if you look at it consistently over the last 3 years, if you look at it from 6.61, even with this second half year, where we had to do the bulk of the provision, it has been around 9.85. So we will further improve on it as, I told that logistically, we are setting a plant in the, south, and our bulk of procurement is happening from south. So the logistic cost will be much, much lower. Also, I mentioned that because we have got the working capital, so the interest cost will also come down. Further, we are in the process of ramping up our operational efficiency. So all this put together, we see, EBITDA margin only improving from here. Current level is 9.85. We might be probably going to 12.5 kind of.
Sorry, what are your guidance for the margin? 11%, 12%?
So I cannot give any guidance, but I told you the reason which we will ensure that the EBITDA margins are improved. Right? Okay. I mean, that's obvious. See, if you look at it, while we are comparing apple to apple, last year our logistic cost was 3.22 crore. This year, while the revenue has gone up by 50%, a lot of procurement has happened from south. So as a consequence, our logistic cost has gone up from 3.2 crore to 6.2 crore. Correct? So what remedy we are doing? Yeah. We are already setting up a plant in south so that we can bring down our logistic cost and go for more revenues.
I got it. Thank you for the detailed answer. My second question would be, sir, on the Hyderabad plant. So last phone call you mentioned that you would be targeting a 15,000 metric ton plant, and then it increased to 25,000 metric ton this quarter. So I want to know the reasons behind this increase. Like, are we expecting a good opportunity here, and how? Yeah.
I am glad that you are really, looking at the numbers through a microscope. But I am glad to answer it also. So in Hyderabad, we first acquired 2 acres of land, which we already paid for. Now, the 0.5 acre land is also available to us, which we are procuring. So as a consequence, earlier we had thought that we will make a plant for 15,000 ton. So now because we are taking additional land of 0.5 acre, so we are now trying to make a plant for 25,000 metric ton.
Okay, because of the availability of more plants you have.
So land was available.
So if I missed it between the con call, so what is the planned 15 to 18 crore total capex for this plant? How are you going to fund it?
So already the land is already been, as I said on the last call also, majority of it would come from internal approvals. We do have a land in Ahmedabad as well, so which we are in the process of, offloading. So a lot of funds, whatever we are getting, we are going to be using it, but there is internal approvals. If you look at our capital reserves, there is enough money for us to do a justifiable investment. As I said, that bulk of the procurement is happening, from south now. So it makes more sense to put up the plant facility and bring about more operational efficiency in the system.
Fair enough. So we would not be expecting an increase in debt in coming years, or are you planning for that?
No, we are not.
You're not planning. Okay.
So in fact, just to let you know that till 23,
Namo always continued to be the cash-rich company. For the first time in 23, when we got bulk orders, we went for funding, and now with IPO money coming in, we have again been independent. There's no debt.
Got it. With many congratulations for that, sir. It's a big achievement for this big achievement.
Thank you so much.
My last question, I would just ask my last question, and then I'll just get back into the queue. It was like your other income, as we saw, like 1 crore is very small amount if we see it like that, but 840% increase if we compare it to FY24, so it's a major chunk. So is it repetitive in future, and can you just brief me about the sources of this other income?
Again, I will compliment you for your detailed analysis, because you have really read the numbers. That my compliment to you. The difference is that when we got the IPO money, so the surplus money, because the money was to be required in stages. So we kept on putting this money in FDRs, right? So we got about close to 67 lakh of interest income also, which you are seeing is a big jump of 800% in the other income. But, of course, the money is being used, right? So money we got in September, some money has been spent, money is being spent in stages. So that's the reason we have got interest income. Even today, we still have you must be seeing in our cash and bank balance 11 crore, out of which 10 crore is basically in FDR. So which will mature, and then we again, use it as per the needs.
So how much total of IPO plus this interest income is left right now in your current balance sheet?
This is about 10.5 crore.
10.5 crores we have. Okay.
Yeah.
That's a good number for us for the CapEx plan.
Yeah.
Okay, I would join the queue. Thank you so much for answering.
Thank you so much.
Thank you.
Yeah, thank you.
Thank you. We have a follow-up question from Kaushal Sharma from Equinox Capital Ventures. Please
Yeah, hi ma'am. I have a follow-up question. So my question is on the industry side, like in case of your lithium-ion batteries plant, so do we source our batteries from the international market as well, like scrap and all? Because in India, there is a gradual shift on the electronic side and there is some slowdown, and on an average, the battery life is around 5 to 8 years. So do we have any opportunities to import the scrap of the batteries from the international market as well?
Yes, we are looking to import. We are going to apply for the import license. It is a regulated business. We cannot get the scrap batteries to India, but the cells for refurbishment can be procured, and we are going to apply for the import license once we have our final authorization for the unit.
Okay, so the complete battery we cannot import like cells only we can import, right?
We cannot import scrap battery, which is of no use just for black mass and shredding purposes. We cannot import it, but the cells can be imported.
Okay, the cells can be imported, right? And which are the major countries are we looking for?
Yeah. But that needs special license from the authorities, from the ministry. So, it's not something that anybody can do. You need to have a proper battery recycling plant for getting that license.
When do we expect this license to come in our company?
Maybe 60 days.
Within 60 days. And which countries are we targeting like?
We are targeting Europe, UK and US primarily.
UK and US. Okay, sir. Thank you very much for answering the question.
Thank you.
Thank you. The last follow-up question from Riddhi Agarwal, an individual investor. Please go ahead.
Thank you for the opportunity again. So I just joined the queue because of many questions. So it's a follow-up question. You said that the major challenge the company is facing is raw material sourcing. So what measures we are taking to mitigate that? Like you told me that you are procuring from South also, but other than that, how you are just mitigating the barrier in this industry?
See, the only thing that we can do is probably reach out to bigger geographies. This is urban material. this kind of material flows from urban to rural centers. So we are trying to get our units to the maximum urbanized areas. So that's why Hyderabad is probably the fastest upcoming city of India. It is high tech, modern, and it's going to be densely populated in a few years. So our continuous effort is to reach out to the maximum sources of e-waste generation, which are the urban centers of India. That's why we need to have stronger presence in the bigger cities, where more urban population is living. That's the intent for us going forward.
Okay, got it. So what would be our current market share?
Ma'am, current market share is something I cannot quantify it because, as you know, as we speak, 85% of India's e-waste is still handled by the informal sector. But I would say out of the formal recycling mechanism, our market share would be anything close to 3%. That I cannot give you references for, getting to this number. But this is a rough assumption that our market share is only about 2.5-3%.
Yeah, fair enough. Actually, my follow-up question was actually that last phone call, we had a target and vision of doubling the market share in next 2 years. So how are you planning that, and are we on track of this?
Yes, we are. As we have the increase in 50% revenue, most of the contribution has come from alien territory for us. So, which is south of India. So we are strengthening our collection channels. And what was the question? Sorry, I lost it.
I just said that
to double the
doubling the market share.
If you look at it, I shared that from the last year, 35% of capacity utilization, we have gone to 55%. That's another way of looking at how to develop your number, right? So we are moving in both the direction. We are, already, going through a expansion strategy. We are strengthening our network. We are already ensuring that our capacities are fully leveraged for revenues. So all these processes are on. I'm sure that 2 years, is a good time frame to really look at the double the number.
Definitely. The margins and all the results are very impressive, and your expansion plans are very good. Last question would be that just because our Lyon battery segment is just operational in next quarter, can you set some target clients, your current target clients, and any orders you have in hand right now?
So as I said that this happens to be a complementary business of us. We have got a lot of battery which are coming anyway for us, which is a part of the various consumer products which we recycle. But already we have started building, contacts, and there are, 2-3 major EV, players for whom we are really doing the e-waste work. So we are, the moment we have already got the CTO. We are waiting for our formal operation, which is expected in next 15 odd days. The talks are already gone. We are already having our business development team for that. So I think everything should formalize in next probably 60 odd days. That is the reason we are committing about 7 odd months of business in this year from this plant.
Okay. That's it from my side. All the best for your future. Thank you so much.
Thank you so much. Yeah.
Thank you. Now I hand over the floor to the management for closing comments.
I would just like to extend a, thanks to all the, investor analysts whosoever attended this call. I am glad that people have so much of interest about this growing business. E-waste continues to be a challenge for everyone. I think as an individual, we really owe it that we need to ensure that our gadgets, whatever we discard, is responsibly recycled, keeping all the environment, things intact. So once again, thank you so much for joining this call. It was really a pleasure to answer all the questions. Hopefully, we have done a decent job in terms of answering all your queries. Thank you very much.
Thank you, sir. Ladies and gentlemen, this concludes the conference call for today. Thank you for your participation. You may disconnect your lines now. Thank you and have a good day.